Hi, and welcome to the Stock Scores Market Minutes for September 18th, 2016. Where do trends reverse, or specifically, where do downward trends reverse? Well, they tend to make a reversal at support. They may bounce at support and then ultimately break through again, but very typically they will find some support at support, hence the name. I'll tell you what support looks like in just a moment. Now, that support can reside at trend lines or at previous low points. So if you have a market that's been going up like this, we have a trend line like this. If it pulls back to that trend line, it should bounce there. If it breaks that, then it may move down to horizontal support where it could ultimately bounce. So those are the two types of support. You have horizontal and trend line support. As I said, typically there is a bounce at support, and then what you want to watch for is there a formation of a rising bottom. So if you come down to support, you bounce, build a little rising bottom, what you want to look for is that break to the upside. If it instead breaks down that second time going through that trend line of support, well, then you have got the next leg down, and that's something to very important to watch for. The most reliable trend reversal is a break from a rising bottom. And so if you have that downward move on a pullback like we're in right now in the market, we build a little base and then break to the upside, we should continue to move higher. So let's look at some charts. We'll talk about this more so on the longer term weekly chart. On the 30-day, 60-minute chart, you can see that we had that big downward move there. But what I want everyone to notice is that the tops, each time there's a little show of strength, it's a lower top than the previous one. And the result is you have this pattern that looks like that. That is a descending triangle. Not critical until we break down through this support level, but my expectation is we probably make a stab and try to make a downward move through that downward trend line. Now, what does that mean on the longer term chart? If I draw the upward trend line on there, it basically means you're going to come down and test this longer term support on the S&P 500 chart, SPY. So we've probably got another week of downward action. It tests this support level, and then we'll see if it can bounce and hold and continue to new highs, or are we ultimately going to bounce here for a little bit and then break down through that upward trend line? So that's what you want to watch for. The point with this is that although the upward trend is still intact, not real reason to be too scared yet, you do want to be careful because there is that potential to break the longer term upward trend line. Here's the Russell 2000, which is a small cap, similar situation where you've got an upward trend line, you're getting close to it, probably have another one single week of downward price action where it should bounce there. It could bounce this week. I mean, it doesn't have to touch the trend line, but certainly something to be cautious of. Now on this chart, however, the difference is that the highs we hit here were not the all-time highs. They were lower than those highs from last summer. So the small cap's still lagging the large cap stocks. In the Canadian market, similar situation. You've got these falling tops in the short-term chart. This, of course, the 30-day, 60-minute chart. What we have to watch for is, does this support from 4 or 5 days ago get broken? If it does, we're going to move lower. Now, this one is a little different because we're actually at the upward trend line. And so a breakdown through this would be a little more critical. And because we're seeing a little bit of acceleration in some of the weakness in commodities, this could be a little more realistic for the Canadian market where we break down through that upward trend line. So I would say a little more caution is warranted short term on the Canadian market. TSX Venture, similar situation. We have this nice long-term upward trend line. We're holding that, but notice that we've got a falling top here. So we've got this top and then a falling top. One bad day breaking down from this chart here, and we're probably getting a reversal of this long-term upward trend. Why is that happening? Well, gold is weakening. Oil has been weak. Looks like it could get weaker. So that could cause the TSX Venture to move lower. On the Treasury bonds, we've got our upward trend line. We're really flirting with it. It tried to bounce off of it this week, but one more bad week, another move down. What does that mean? Interest rates up. If this chart is going down, that means interest rates are going higher. And that's really what the market is looking toward. And really the cause of a lot of the weakness in the market right now is the fact that interest rates are expected to rise, and we're seeing the bond market start to price that in. Fed hasn't done anything yet, so it's just the market speculating that they will do something. On the US dollar side, well, if interest rates go up, US dollar should go up as well. And notice the slowly rising bottoms. This is a weekly chart, but if we get a break of this downward trend line here from a rising bottom, that means the US dollar probably moves higher up into this zone, and that again would be motivated by the expectation that the Fed is going to raise interest rates. That is, of course, bad for things like gold. Stronger US dollar hurts commodities, but of course also a more hawkish Federal Reserve is also bad for gold. So we're seeing gold sort of tickle through its upward trend line. Been building falling tops here for the last 2 months. I don't think it's a strong breakdown yet, but I do want you to be very cautious with gold. This can turn around this coming week, but right now it's in the danger zone, so you want to keep a close eye on that. On the oil side, we've got this falling top here. We still have rising bottoms, so it's not terrible. Long-term trend, of course, was down, so we're in this sort of pennant pattern right now. What you want to watch for is what direction does the market break out of that pennant pattern. Breaks down, oil's going to probably test its lows. Breaks up, that's probably because the global economy is getting better. Maybe the US dollar doesn't do what looks like is probably going to happen. I think that's the less likely outcome, a break to the upside for oil. Not impossible, just not probable. The fear index shows that concern starting to be priced into the market. You see 5 or 6 days of pretty strong volume on the VIX and a little bit of upward price movement. So will this be like a little fizzle out like we had in June, or is this going to lead into something more substantial like we had back in here? Remains to be seen, something to watch. So I've got neutral ratings on US and Canadian stocks long term, but bearish ratings short term. I think caution is warranted. Same thing on gold and oil. You see that stronger US dollar, that expectation that interest rates are going to rise, that is starting to cause these commodities to roll over. Volatility has been compressing the last 3 or 4 days, but there is still that pessimistic tone to the market, and that could evolve into another downward leg that tests the longer term upward trend line. Doesn't mean necessarily a major pullback, but I do think caution is warranted in the near term as we move through the fall. I want you to watch the VXX for trading opportunities in the short term if that happens, but only if that happens. You got to treat this as a short-term trading vehicle if we get more corrective action. All right, let's look at the trade of the week. This is a trade I did on Friday, a little flag break here. Notice the abnormal volume on Lionsgate Films, LGF, the start of the day. That's what caught my interest. Bought it right in there. Scaled in, I think there, maybe here, I can't recall. But a nice run through the end of the day. I did not actually sell out there. I decided just to hold it till the end of the day. That proved to be the right thing to do. I sold it right at the close for a nice little a run there at 4 or 5 to 1, I think. All right, well, that has been the Stock Scores Market Minutes for September 18th or September 19th, 2016. Have a great week in the market. Subscribe to the channel. Leave your comments below. Like the video if you like it. And have a great week in the market. Trade well. Thanks.